2014 has already been a strong year for mergers and acquisitions, and the numbers suggest it could get even stronger. Hello and welcome to this special edition of the Deal Report. I'm Jeff Kanige. Joining me to discuss those numbers is Richard Jeanneret, America's Vice Chair of Transaction Advisory Services at EY. Rich, thanks for coming in.
Great to be here.
Okay. The numbers I'm talking about are in your Capital Confidence Barometer.
Right.
What is it? Why do you do it?
Well, the Capital Confidence Barometer is a survey we do twice a year with over 1,600 C-suite executives around the world. About 450 of them are here in the U.S. And we survey them on a variety of issues around confidence in the economy, macroeconomic, geopolitical issues, how they generally feel about the state of the M&A market and where it's going. But we touch on a variety of subjects that are influential to how the M&A ecosystem tends to move with markets.
Okay. So it's an extensive survey, a lot of folks involved. What's your takeaway this time? What's the most interesting finding, the most important trend you're seeing now in this latest version?
So we've done 11 of them going back almost 6 years now, and I would say the confidence in this survey is the most robust of anyone we've done so far. And not surprisingly, we're at the best point in the recovery since the Great Recession, and M&A investors are feeling better than any point in time since really 2007. And I think that's why this year has been a good year for M&A. It's been the year of the big deal for sure. We're starting to see volumes recover. The most interesting part of the takeaway, I think there's the study, a couple of things. One, 81% of the respondents said they thought the M&A market would get better within the next 12 months. Shockingly surprising about the statistic, not one single respondent said they thought the M&A market would get worse. I thought that was the more interesting part of it, not one single contrarian. The middle market is where they want to play. The middle market has been held back this year. This has been the year of the big deal. If you look at the middle market transactions, those under $1 billion, there haven't been as many this year. In fact, the volumes are down year over year. I think the herd's about to come out. I think the confidence we've seen in bigger deals, I think that's the story with the big deals this year. Value per transaction up over 50%. I think that's a real signal of corporate confidence in the economy, the geopolitical situation, where M&A's headed. And I think the younger middle market companies have been sitting on the sideline waiting to get in. I think the herd's going to come in. And I think the middle market will be strong. That's what the survey points out for this year. 41% of the respondents have 5 or more deals that are actively working on it in their pipeline. From our survey 6 months ago, that's a quintupling. Okay. So I think the surge is about to come here. Do I think it's going to be hockey stick? No, I don't. But I think we're going to in the midst of the sort of the first M&A recovery since really 2007.
Okay. So we love the middle market. We've always followed the middle market. One of the other things, two of the sectors we've also followed closely are energy and healthcare. We've seen consistent strength over recent years. Are you seeing the same thing? And what are some of the other industries we should watch?
So the energy industry is one that's been off from a volume perspective over the last few years, and I think with the price of crude today, I don't think you'll see as many M&A transactions occurring. Clearly what's happening in healthcare, the convergence with healthcare and a number of industries, the life sciences industry, technology, the challenges of, and the opportunities of Obamacare, getting closer to the patient, the convergence around patient and the patient as a consumer and consumer care, I think will continue to drive opportunities in that area. It's clearly a disruptive industry for sure. Mm-hmm. Its business model is being reinvented by the day, and I think the convergence of other industries will create great opportunities in healthcare, so we're pretty bullish on that. There are a number of other industries, though, Jeff, I think they're going to see some action. The technology industry is ripe. It's been down for a couple of years. I think you will see that industry perhaps transform itself in a couple of ways. Waves. I think there'll be a divestiture wave that occurs in the technology space as companies reinvent their business model, rapidly adjust to the changing trends in the cloud, mobility, all the apps that are being developed, adaptive technology. I think the cloud is clearly transforming that space. And then I think that could lead to a level of M&A activity. As bigger companies get smaller, focus on a new business model or a core business model, and then try to grow through that. That form of activity. So I do think that technology space should do some things. Consumer products has been a good industry. The focus on brand for sure. This next generation of younger professionals, very committed to brand, focused on brand, great margins in brand. But then you've got the emerging middle class occurring all throughout the emerging economies of the world. And they want consumer stuff, and so it's driving investors to look overseas in those economies and transact in that space.
Okay, let's talk about something that might keep these folks awake at night, activism. We've been following activism, shareholder activism. Are your executives, the executives you're surveying, are they concerned about it, and what are they doing about it?
Activism for sure. It's been a very high-profile story in the business media today. Activism is driving, I think, transaction activities, though, in ways people aren't as aware of. And I think what I mean by that is Corporate America is getting much more proactive about being ready for activism. They're doing defensive reviews of their business should an activist get inside the stock and try to transform the organization. We've seen it in the Fortune 50 companies. If an activist can be in the Fortune 50, they can be anywhere. So corporate America is much more proactive in getting ready for activists today, and they're undertaking a thorough review of their business. Activists tend to come in around the portfolio and whether the business focus on the right portfolio of assets is right, or the sum of the parts greater than the whole. And they also come in around cost. And so as corporate America does a defensive review of their business, they're thinking about the business very differently, and they're looking at their business in ways they perhaps would not have had they not done undertaken that kind of assessment. So it's leading to transaction activities. They're self-assessing their own portfolio. They're looking and say, hey, maybe there are some businesses we shouldn't be in anymore. Maybe they're not core to us anymore. The growth rate isn't right. Maybe we need that capital to grow faster elsewhere. So I think the self-review, the proactive defensive analysis of their business is leading to actual transaction activity. So my activists are here to stay. There's a lot of dry powder on it. They're not going away. I think corporate America is going to get more prepared and ready for it.
Good. Well, glad to hear that. Finally, let me get your assessment. 2014, a great year for M&A or the greatest year ever for M&A?
A good year for M&A.
Okay.
You know, it's clearly been the year of the big deal, as we discussed earlier. Volumes are up, but not, you know, in a hockey stick kind of way. Modest recovery in volumes. I think 2015 could be a better year as the middle market starts to come out and confidence continues to build on itself. It's been a very fragile economic recovery over the last 5 or 6 years. The building blocks are getting stronger, but it is a block by block kind of recovery. The stronger the foundation becomes, I think the stronger the M&A wave goes. So I think we're up for a modest recovery this year. Clearly the value per transaction is the story. But the real story is how many deals get done, I think. And so in 2015, I think you're going to see more of an uptick in volume. I don't think it's going to be a hockey stick, but I think it's going to be modest. And I think we'll build on the success we've had the last couple of years.
Okay, we'll leave it there.
All right.
Look forward to
Great.
it. Richard Jeanneret from EY, thanks for coming in. And that's all for now. In New York, this is Jeff Kanige for The Deal.